Hey everyone, welcome to VLOG11 of Lake Effect Investments. My name is Omer. I have about 25 years plus experience in banking and finance, and now one of the things that I do is I work on this YouTube channel and also looking to build out an investment strategy. Have a number of stock picks that I started with back in August 2024. So I cover the performance of those stocks in this portfolio, go over market updates, and then as well as look at what the larger economic as well as the geopolitical landscape is looking like and how that's updating and how that is trending out, as well as any other specific relevant news to the markets or to the stocks. And one of the sectors that I follow closely is the electric vehicle sector. So I'll run over some updates on that as well. Okay, and then hopefully we can keep this vlog down to a reasonable time period this time. Okay, so let's take a look at what happened in the markets this past week. So the S&P 500 declining almost 2%. The Dow Jones declined the most. It's the top 30 industrial stocks, so it makes sense that the inflation tariff fears will hit it the hardest. It's down almost 3%, 1,300 points. And you can see the NASDAQ over here as well, down about 2.25 points, 438 points over the course of the week. So yeah, basically a couple of reports came out. There is an uptick, even though it's slight, in inflation. And there is also more claims of unemployment claims, even though that also is a slight uptick. So a slight worsening in the unemployment, but only very so slightly, and also a slight uptick in inflation. But of course, the greater fear behind that is that this is just the beginning of a trend. And given all that we're hearing in the news about tariffs, even though the initial salvo around tariffs with Mexico and Canada kind of had a bit of a retraction, and I think the markets kind of took that as a positive news, was seen as more of a negotiating tool with these countries. But now it seems that the tariffs are definitely coming down the pipe, and there's going to be 10% in China, 25% on autos and pharmaceuticals, and maybe a whole bunch of other tariffs going on the European nations as well. So it is concerning a lot of industry leaders as well as small business leaders and consumers as well. And then what's going to happen is that when you get that kind of news and you're absorbing it, the mood, the overall sentiment is gonna retract, and you're not looking to spend as much money as you previously were, whether you're looking to buy a car, whether you're looking to buy a new home, or just a bunch of stuff. It just makes people cautionary, puts them on the back foot, and consumer spending can retract. So that's not good for the economy. But inflation and tariffs do play into those fears. So I've got a little bit of a call box over here to talk about levers, which means that even though this is early days to really understand what the impact and effect of tariffs and overall inflation is going to be, government or the Trump administration do have some other levers that they can pull to maybe alleviate the effects of tariffs and inflation. So this may be tax rates. So tax rates is maybe not considered to be the lever to counter inflation, because the idea is that if you lower taxes, you're gonna pay out more liquidity to the average consumer, who can then go out and spend that money, right? And then that will cause more demand in the economy, more demand for goods and services, and it's going to lead to inflationary pressures. But if inflation is taxing the consumer, and it's basically financially pressuring the consumer because they don't have the income levels going up in the same rate as inflation's going up, then taxes are probably just going to be an sort of an offsetting effect against inflation, and it may not just necessarily need to lead to new demand. So inflation and interest rates is something that the Fed does, which is the Federal Reserve over here, to counter inflation. But they don't have the tax rate lever. That sits with the executive government. So Trump is probably going to have his hands on that, and he may choose to. So there's already a lot of narrative and chatter around that. Interest rates can also be another lever. So interest rates, the Fed is basically holding interest rates, right? They're talking about doing a pause right now because they don't know what's going to happen with inflation and tariffs. Well, I guess they have an idea that it's going to go up. But if consumer sentiment retracts, right, which means people just are not spending because there's a lot of uncertainty in the market, there's a lot of uncertainty in the economy and in politics, and they think that maybe some negative things are going to happen down the road, so you're cautionary, you hold on to your savings, you don't spend on things that maybe you thought that you might end up spending on, and you go into a wait and see approach. So if that happens, that's not going to affect demand, right? That's not going to pressure prices out of demand. And even if you get higher tariffs and you have some higher inflationary pressure, but you are looking at consumer sentiment and you're looking at consumer behavior and that is retracting, you can lower interest rates at that point in time because you don't think that it's going to lead to higher demand, right? Just kind of the overall economic cycle and the overall sentiment in the economy is lower. There's more caution, and there's more holdback with spending, right? So even if rates move a little bit up and down, people don't really care because they think that, we don't know what's going to happen 6 months down the road. Maybe we're in a recession, maybe we're in a trade war, maybe there's geopolitical impacts coming into the economy. So uncertainty prompts that, right? So I just wanted to mention that there are levers available, but this is top of mind right now. Geopolitical is going to be as well. Some people may look at the Ukraine U.S. Peace talks in Saudi Arabia as a positive thing, but there's also stuff going on with Europe. Pretty big stuff going on. I mean, a lot of political commentators are saying that the transatlantic alliance that started with the end of the Second World War and with the Cold War, with the start of the Cold War versus the communist Russian ideological front versus the Western capitalist front, which was very solid with the United States and Canada and Europe up to this point. I'm not going to get into the political reasons for that because, of course, I'm not a political commentator. But the kind of the messaging that seems to be going out is that Europe needs to kind of step up and take care of this front with Russia and Putin, kind of more on its own, or kind of do more in that regard, rather than relying on the United States to lead this effort and to keep this coalition alive and to lead it. So maybe that leadership aspect needs to go to Europe, and there's been talk about more military spending and higher military budgets for European countries. Now that they see this retraction by the United States, and they may think that we pretty much have to step up and face the Russian front more on our own. So again, pretty early days with that, but that does lead to a lot of geopolitical uncertainty as well. So it's kind of up there. Economic recession, lower growth. I've got the LT next to it, so it's long term. We're not there yet. We don't have a very good view of where these higher inflation and lower GDP, and if there is a retraction, a significant retraction in GDP, is going to go. But I think the next few weeks is going to be very interesting in that. And there is reporting coming out next week, which is going to hit on consumer sentiment, consumer confidence, and we're going to look at unemployment as well, and then GDP as well. So it's going to be a pretty full week next week as well. Kind of on the flip side, just to mention a couple of quick positives. There was a CEO confidence survey that was published in the Washington magazine, The Hill, and I read through it. It seemed pretty genuine, even though it looks very counterintuitive right now in the middle of everything that's going on, that CEOs are feeling confident. But yeah, that was interesting. So I kind of dropped that in here. But let's see what happens with that. Right now, I can't really think of anything that CEOs might be thinking that gives them more confidence. Maybe with the exception of the fact that the overall economic fundamentals are pretty good. They're pretty strong. I don't think anybody's seriously considering a crash scenario, a significant crash scenario. And I think one of the reasons for that is that I had this here somewhere. In previous mega crash scenarios, and I'm talking about stuff like the dot-com bubble, which was way back in 2001, 2008, mortgage crisis. We'll leave the pandemic out because that's something a little different. You know, it's not induced by economics. And both those crashes, mega crashes, had a very high level of fraud in the market at the time. So 2001 dot-com bubble, there were dot-com companies out there that had hardly done anything, hardly punched a ticket. And just because they were in the market and they were dot-coms and they were supposedly working on something, they would have crazy valuations because everybody thought that the internet economy is just skyrocketing, and anybody who has anything to do with it is going to do super well. So, you know, it was a euphoria phase in the market, but a lot of these companies turned out to be just nothing. They just didn't. They had very basic business plans, and their valuations were, I wouldn't call it fraud, but very superficial and very fictitious. Then the 2008 crisis had significant fraud in there as well, and I would go ahead and call it even Wall Street induced fraud in a sense, I guess, because there were very risky mortgages that were being packaged and they were being sold in bond markets as diversified debt, because, you know, a very risky subprime mortgage from California, supposedly if you package that with a very risky mortgage from Texas and one from New York, you have diversified debt, right? So this is kind of how professional, established corporate rating agencies were rating these bonds, these mortgage bonds, and people were qualifying for these mortgages without any criteria, without having to verify their incomes, without having to provide documentations. So there was a lot of, I would say, I don't know, criteria issues, right? Just basic fundamental criteria issues in those situations. And we kind of don't have that right now. I know everybody talks about the market being at record levels, but if you look at the Magnificent Seven stocks, which I track, they're solid. Their fundamentals are pretty solid, and they are growing their bottom line at very spectacular rates, or they have been for the past couple of years. And even now, with NVIDIA announcing its earnings next week, there's a lot of narrative around this being an amazing opportunity, a golden opportunity, and that maybe NVIDIA has substantial upside even at this point. And there are people that are buying up NVIDIA based on a lot of that. It's already valued at 3.4 trillion. Probably has a sky-high PE ratio, and it's supposedly going to get even more valuable. And the other Magnificent Seven companies, as you know, everybody has a super balance sheet and a super P&L profile. So it's not the kind of loose, very loose fundamentals that we saw in those mega crises and mega crashes. Anyways, I don't know if that's what the CEOs are thinking, but let's see what happens with that. But that was an interesting point. Okay, so let's check in on EV industry real quick, which is a regular feature that I have over here since I'm interested in this and hopefully plan to make an investment in EV stocks when the time is right. So EVs, as I've mentioned before, have already been experiencing stress due to lower demand in 2024. Given that the early adoption phase, where it had supercharged growth in 2022 and 2023, is over now, and people are maybe looking to have improved range, battery life, charging, networks around EVs before we get to kind of the mass adoption phase. So the U.S. market is only 8% EVs right now, versus Europe, which is close to 20%, versus China, which is kind of close to 50%. So there's definitely going to be, as RJ Scaringe, who is bouncing around over here a little bit, who is the CEO of Rivian, and Rivian is kind of one of the more of the benchmark flagship stocks that has very high visibility in the market around EVs. He said that it's a question of when, not a question of if, when the EV boom will take place, but that when is a question, and it's looking like that when might get pushed out because, as I said, that given even existing stress and pressures, now the Trump administration seems to have the EV industry in its crosshairs, and Trump is ordering all EV chargers to be switched off or to be taken out of federal buildings and government assets and stuff like that, plus the repealing of the tax credits, as well as any Biden-era mandates around adoption of EVs. So the industry is going to take that. I think that pressure is definitely coming down the road, and in the interim, next 3 to 6 months or so, we may see even more stress in the EV sector. I'm trying to get to my EV group over here. As I talked about last vlog, we exited blink charging, but that was kind of more on fundamental grounds, and now basically, if I want to re-enter EVs, maybe in different stocks, and maybe that's going to be Rivian at some point, or even ChargePoint Holdings. The question is, what's the right entry point, right? Or what the outlook is. Conventional wisdom will tell you, do not try to time the bottom, and you usually want to pick up stocks when they are in the stress aspect, right? Because once that stress is over, or once positive news and results return, usually at that point it's too late to buy up the stock. But given that perhaps softer demand and even more regulatory pressures and environmental pressures are coming down the road for EVs in the short term, we have time. I don't think this is something that you have to scoop up soon. You can do it a little bit later as well. So I think that there is going to be more bad news. I think once the taxes are repealed, the tax credits, as well as removal of all the mandates and everything, that's going to be a significant bump for the industry. So it probably still has some more downside, but I think overall the electrification is going to continue. It had a very robust, very sharp uptick in 20, kind of starting over here and just supercharged, and then again, and then maybe this was definitely an overreach. But now we're sitting at historical lows with this particular industry, and that's kind of what my interest is over here. That it'll resume growth at some point and probably come back to maybe not these crazy levels, but something that is substantially better than today. But anyways, EV stocks buy up, kind of a wait and see mode right now. Okay, so now for the final part. I hope I haven't left anything out. No, not really. For the final part, let's take a look at the stock portfolio. So definitely a retraction from previous highs. It was performing as high as 50%. But these high growth tech stocks, they'll do very well when the market's going up, but they'll also come down faster when the market's coming down. But still, at almost 40%, vastly outperforming any of these major indices. So even almost double the Max 7. So it's pretty good. And some of these stocks are holding on to their gains, particularly Butterfly is. So let's talk about Butterfly. What do we do over there? And then we'll talk about Ardelyx as well. Let me just touch on QBTS real quick. This is the quantum computing stock, and I did a pretty long piece on it in the previous vlog, so I think it's in VLOG11. You can go check it out if you want. This has only been on the books for 25 days. It's already at 27%, but it's very volatile, right? And that's what you expect from this stock at this point in time because quantum computing is super new. It's been fluctuating between 550 and 725 or 750 pretty regularly, right? Let's just take a quick look at it. And that's what it's supposed to do. That's how it's gonna be for a while with these stocks, right? So yeah, up down, up down. But at least I mean, quantum computing is getting a lot of attention. It's getting a lot of visibility, and I would say that the original comments by Jensen Huang at Nvidia and Mark Zuckerberg at Facebook that quantum computing is decades away or 20 years away, I think most people have kind of discounted those remarks, and a lot of people maybe who are closer to quantum computing and on the ground trends than Mr. Wang's and Zuckerberg's 30,000 feet plus view are saying that no, it's years away. And Microsoft came out with its quantum chip as well, and they're also saying, yeah, and it's gonna be a years thing, not a decades thing. And who knows, it may be even faster than that, right? If this turns out to be a sort of a race, that this is the next big super technology in the world, and whoever gets to it first, whoever gets to use it, utilize it, commercialize it first stands a huge advantage. You could also see sort of a race-like scenario. But anyways, enough of quantum computing. Let's go back to Butterfly, our super stock. Yeah, 6 months. So this is exactly where we got it, right? And it is now sitting at 430, so it's at 300% plus, and it's even shot up, in the interim. If you look at sort of yeah, it was 494, almost touched $5. Wow. Okay. So 6 months. Yeah. So one of the first things that I'm gonna probably think about whether this is as good as Butterfly is gonna do, or whether it may have some more upside, and if should be holding on to it, or should we be booking in our gains, is that the initial start point of $1 was probably a high stress, high fear factor situation, which is kind of where it was back when this dip took place, kind of in the overall market. So I wouldn't say that this 96 cents was a very real price. I think it's a good price. But usually when fear factors are high and you have selling pressure and you have sell-offs going on the market, that's usually when you get this price depression. And as you can see, it kind of recovered out of it pretty quickly, and then it kept its level more higher in the higher ones, lower twos around that point in time. So I think that's kind of where its fundamentals were more sitting, and then subsequently, as more good news, good commercial news for the company itself and its products and its sales kept coming through, the stock kept doing better and better over time. And even in recent, kind of more recent timelines, if it's faced selling pressure, because if the idea is out there that its stock price is a little too high, it's come a little too fast, a little too quickly, whenever there is possibly selling activity, it does tend to recover out of it pretty quickly. And I know this is like very short time periods, it's hardly January. Maybe you can take a 60-day timeline and you can say the 60-day average over here is kind of more already in the threes. So maybe we don't have that much of a downside with this stock, right? It kind of was more stressed over here. It stabilized more at this point, and then it kind of has been more stable at this point. Maybe you could say that the 4 plus area price is not something that it may be able to sustain. We don't know if it's going to be able to do that or not. But maybe one of the things that you can look at is, where are the analysts predicting the stock to be? So let's go back to, right? Analysts ratings and rankings, you got to take them with a grain of salt. They're usually a bit dated, but they're pretty good. They're not bad. And obviously they're going through stuff with these companies in a lot more detail than we are. What's going on here? Butterfly. Yeah. So it's rated a strong buy, but this is the part I would think is pretty dated. I think if everybody had to redo their analysis, they may just call it a buy or maybe a hold at this point. And that the average stock price, right? The average target stock price, which is I think what the 483 over here means, is still above the 430 level that we have in the market. All right, so that's another plus. So the trend is 6 months, so it's a good period of time. All right, it's not a small, like a 1 month or a few weeks thing where price fluctuations have been very crazy. It's been a consistent uptrend supported by fundamentals. Market analysts are also predicting that it could still have some more upside even from this point. The high end of the forecast is, I guess, $5. And when they come back to revise this, which we'll check out, definitely when they do that, maybe they'll take up their price targets as well. So I think that the stock is pretty well supported from that perspective as well. And then if I was to look at the profit sales ratio, right? Let's just take a look at that. Let's take a look at one ratio. So the company's valued at 916 million. It has its third quarter. It's reporting its fourth quarter next week. So if you just take the third quarter and if you take the revenue increasing trends and assume that the fourth quarter will come in at 25 million, that gives us 100 million in full year sales. And if I do a quick 900, whatever it was, 916, the value of the company, and then divided by its sales. So we have a nine times, right? A 9x profit to sales. And if I try to pull up something where I can compare these price to sales ratios and just kind of get a general idea where they sit in the industry. So I'm looking at healthcare, and as you can see in healthcare, yeah, there's a lot of stuff within healthcare, right? So you just can't take a look at healthcare total. These ones over here, which are kind of the more higher high ratio sectors of healthcare over here, basically meaning that they're expected to grow more aggressively than some of these other ones, which are more staple healthcare facilities, healthcare equipment, and general services and supplies. But biotech is where you would expect the high growth to take place. So that's at 5.5. And then if you look at pharmaceuticals, it's at 3.8. So definitely Butterfly is higher. And even within biotechnology, this is an average. So this is just an overall average of all the stocks. Some of these companies may be bearish, and some of them are going to be holds, and some of them are going to be bullish, like Butterfly. So you gotta have to kind of break it apart as well and see where these high-end companies check in. But 5.5 as an average basically means that the bullish companies like Butterfly will be around 7, 8, 9, or 10. So its profit sales of 9x is not crazy. It's not crazy. I think it's quite sustainable. So I think from all those perspectives, I think that it's not a compelling sell at this point. We'll see. I could be wrong. And I think I'm probably going to hold on to this stock, given that I think the long-term prospects of the companies are pretty good. Its fundamentals are holding up. But of course, once you have a profit of this level in a company, but it's given you back 3 times over the investment over a period of only 6 months, it's your call. It's a subjective call. Of course, you take a profit. That's that's definitely understandable, and I think a lot of people would choose to do that. You can, at the end of the day, never know what's going to happen with a company. Right? It could be some bad news coming down the road. In a one-off instance with a one-off company, anything can happen. So, we know that, and we have that diversification in the portfolio. So, there's definitely a risk, I guess, in holding on to it, but there may be some reward as well. But I think, given all the factors that I've looked at, I don't think it's a huge risk. And even if the stock suffers some downside, hopefully it's not going to be substantial. So let's quickly jump over to Ardelyx, which announced its fourth quarter earnings just last week. I sat down live and listened to the entire call, and I enjoyed it. I liked it, even though lost actually quite a bit of money. The stock was doing about $6.40, I think, a day or two before that, and then it lost about, I think, a good 20%, 20 to 25% of its value when the reports came out. But just to be able to make something of this phenomena, if you look at the actual report itself, so the let me again go over a little bit of history with Ardelyx. Right, so let's switch over. The stock's been very volatile, even though its company fundamentals and the trend line has been pretty good. So it's been gradually, consistently growing revenue. Its drugs to market have seen good adoption and good results from patients, and it has a very pretty healthy balance sheet. But the company is already valued at 1.2 billion in market cap, and it has given good long-term upside performance, especially, right? I don't know what happened over here. This is too far back in history, but especially if you look at these points over here, it's already given investors returns over a couple of years of about 200% or so. So that definitely is going to be pretty substantial, and it's going to count as a high performer. But kind of what's going on in more recent history is that it's sort of its high visibility, its star drug Foza, if I pronounce that correctly, right? What is it? Yeah, Foza. Was not approved for CMS, which is the Center for Medicare and Medicaid Services. So I think it was Medicare Part D reimbursements in that court case that went against Ardelyx, right? So Ardelyx is basically working on a revenue stream for Foza, and they're building out their acquisition channels, their sales channels, and their marketing channels. And of course, that is routing through a very complicated and a very regulated healthcare system where you have Medicaid and you have Medicare and you have overall insurance and how these drugs get prescribed and how they get reimbursed, and the motivation that physicians and healthcare providers have in prescribing these drugs, right? So all those complications, and the particular court case did not come out in their favor. So I think the market reacted and said that their Ardelyx is going to get caught up in a situation where they have to rehash their sales strategy and their sales channels for this particular drug. So it's gonna basically disrupt their momentum, and that's kind of been the narrative around Ardelyx, and that's also why its fourth quarter earnings, even if you look at the earnings themselves, I mean, they're actually pretty spectacular. So full year 2024 versus 2023, this is over 100% growth in revenue. And they're breaking out is Isbarella and Foza, and Isbarella is their other kind of star high visibility drug that's also doing very well, has very good growth. But basically what the market is saying that the future is looking a little uncertain, and we're not sure how well Ardelyx is going to be able to maneuver these complications and where they're going to come out. I think, given these kind of fundamentals, and given that the company now is also profitable, right? And it's not just gross profit profitable. It is actually profitable at the total income loss level. So it's able to absorb its administrative costs, its back office costs, its research and development costs, and still generate cash at the end of the day. So again, that's pretty significant, and I think a very good trend line. And this is the income statement. The balance sheet is very healthy as well. balance sheet has, as of December 31, 2024, about a good 240 million-ish in cash and short-term investments. So it's going to be able to fund its growth, capital expenditures, research and development around new drugs with the cash that it already has on its balance sheet. So fundamentals look good. It's getting a hammering from its prospects and its legal complications, but I think I want to hold on to this stock for now, because I like the fundamentals trend, and this like most recent very sharp drop is also part of the fear factor that's kind of going on in the overall market. So I don't think it's gonna sit at $5 for too long. It probably should have a decent recovery, but I think subsequent quarters, subsequent months, how well they're able to rehash and re-streamline their sales channels and their marketing channels around Foza is going to be pretty instrumental. And they were talking a lot about that on the call itself, that the disruption that is taking place, they're tracking their sales very, very closely. They're tracking physician prescriptions for Foza very, very closely, and they're even providing patient assistance, financial assistance for people who want to stay on Foza that may be part of Medicare Part D. And if they lose that coverage, then they can come to Ardelyx and get some assistance that way as well, which means that the drug has a good credibility in the market. So I know it's a lot of complications, and it's a mouthful, and it's a lot of stuff for someone who's maybe not too interested in the pharmaceuticals industry and in the drug development industry. But I mean, when you're invested in this stuff, you want to keep an eye on these things and also learn. So it's a good learning experience as well. And some previous I wouldn't say insiders, but pharmaceuticals, medical industry specialists whose videos I've watched on Ardelyx have mentioned this, that Ardelyx has very strong fundamental products and has a very good trend line in terms of its balance sheet and also in terms of its profit loss statement. But it's going to take a time. It's going to take a time for it to work through all the healthcare system and to work out the most optimal way to get these drugs to market and to get them to patients. And that it's generally seen as kind of at least a 1 year out thing, right, for Ardelyx. But given that this stock has pretty strong fundamentals, a good position, a healthy balance sheet, I feel better about having it in the portfolio, maybe more as an anchor stock than to maybe exit it given all the uncertainties. And actually, I am kind of expecting a recovery. I don't think I'm too much below the break-even point with this stock. And again, just like we did with Butterfly, I've had Ardelyx pulled up here previously, so let's go back and take a look at Ardelyx. I think it is a moderate buy, so it's and its price target is still pretty substantially higher. And if we are able to even hit this medium point, right, in the price targets that the analysts are giving, that'll be a substantial upside. And I don't think, given recent developments, we'll see what happens. And I'll come back and check in on this as well. I don't think that this is going to change much. I don't think the outlook's going to change much, given what's happened with the previous earnings report. And I think people will just generally keep an eye on it, and we'll probably get a much better indication with the 1Q 25 report, which is going to come out in 2Q, to see how they really fared with their drugs. But they're giving strong guidance. The guidance that they're giving and what's going to happen in 2025 with Foza and Isbarella, they're reaffirming that these drugs are going to do very well. And in terms of their existing acquisition channels for Foza, through physicians who are prescribing these, or through whatever other channels that they have, they're keeping a close eye on it. And so far that they're saying that through mid-February, but this is what they're saying over the phone, they don't see a substantial change, perhaps with the exception of the assistance program that they're providing to patients who will no longer be covered. They'll still try to get the drug over to them at some, with some assistance. Apart from that, they don't see a substantial change in what they're seeing since January 1st, which is when I think Medicare Part D stopped covering FOSA. So yeah, let's hold on to it. It's not a BNGO thing. It's not a Blink thing where you had deteriorating fundamentals within the company itself. You are going to get these fluctuations, and I think if you're sitting in the market for the longer term, this is how I guess we get tested on our resolve for sticking with a stock for the long term, with all the interim pluses and minuses and the peaks and bumps that we're gonna experience with these stocks. And that can happen with these other stocks too, right? That could happen definitely with QBTS, which is D-Wave quantum computing. Okay, so I think that's a good place to leave it at. Very interesting what's going on. I think very fluid, very dynamic in the geopolitical landscape, in the stock market landscape, and also in the economic landscape. And it's very interesting to see what happens with NVIDIA next week, right? How NVIDIA fares and how the market reacts to it, if what the current narratives are saying turn out to be true, and we get a spark, sort of a positive, optimistic spark next week. I think it could even carry the market. It could pull the market a little bit back up. So anyway, we'll see what happens with that. All right. Well, wish you all good luck, and see you next time.